Hey traders, Raghee here, and today we're going to talk about how to analyze volume like a pro. So first thing, there are really two kinds of volume that lots of traders look at. One is time or date-based volume, and the other is price-based volume. Let's talk about each, and then we'll get into how I do it. First of all, time-based volume is, if you're looking at a volume histogram, how many contracts traded on a certain day, or how many contracts, for example, of the NASDAQ that we're looking here, traded at a certain time. And that's probably the most common. The less common, and frankly the more effective, is how many contracts or shares traded at a certain price. When you have the price view, now you're also getting support and resistance that you can see on your chart. So let's get into my favorite way to analyze volume. And for that, I use something called the V-score. Now, this is a study of the anchored volume weighted average price. So now I'm looking at a price-based volume level, and I'm looking at the standard deviation of it. So are we above the mean or below the mean? Are we above an average or are we below an average? And the way we do it is this. Volume can be and should be really the second confirmation step. So what's first? If you really want to use volume like a pro, we don't let volume be the only reason for the setup. We let it be a powerful confirmation of the setup. So you can see right here, I've got a support level from my Darvas automated zone, and I have support right in here. So now I'm going to say, hey, volume, do you agree with the fact that that could indeed be support? Is there a volume-based reason on price that that should be a bounce? Well, let's take a look at what the V-score says. Take a look right here at the support of these lows on the V-score. These are all lows. And notice how they keep bouncing off approximately the second standard deviation. So think of that as support that you would see even on a price chart, but instead, this is support based on the indicator analyzing price-based volume. It's really easy to see. Look how it keeps bouncing off the same area. That bounce then coincides, so all these bounces here are coinciding with the support levels on the chart. So now I have a price-based reason on the chart, and I have a volume-based reason, noting price, to say, you know what, that is indeed a level of support, and that would set up a buy. And up it went. That's how you use volume and analyze it, not from the perspective of time and date, but from the perspective of, am I alone in that trade? Are there other traders that are buying or have already bought, creating support? When you use volume in this way, it is super powerful, and you're going to get a confirmation of the likelihood that traders are already there